Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. I know some of you are hurting even more now, and a lot of you bought in at the 800s. Losing over 25% of your stock valuation is never nice. I thought I would just make a video to hopefully make you feel better about your conviction. Being a good investor isn't just about buying at the best time, but making sure you don't sell at the worst time. Investing is not a one-off action when you purchase and you're done. It's continual. But holding, you might think, is easy, but it's not. You could equally say the same about weight loss. That's easy, you just diet and exercise. Well, sure, but that does take tremendous willpower, just like holding onto your stocks at times. While they're going down, it takes willpower. You won't always have the gusto you started with when you initially purchased the stock. If you were buying in at around the 800s, then welcome to Tesla. It's a volatile stock, and after years of holding, you do get used to this, or at least I have. And I assure you, in the last month or so, there's a very good chance I've lost more money than you. Well, actually that's not true. I haven't lost any money yet, as I haven't sold. Well, except a few to make an options purchase. You only lose when you sell and make a real loss. A paper loss is something you learn to manage as an investor. It's actually a skill to have, dealing with your stocks being down. It allows you to think rational and not get emotional about money. And I'm not selling now, as I didn't invest more than I couldn't afford, which is something you should also never do. And definitely don't put yourself in a position where you should have to sell, because in the times you likely do have to sell, it's the same time everyone else is, which is when you get the worst price. This isn't investing advice, this is investing fact. This is why I also wouldn't suggest you buy on margin, as it can force you into selling. Another fact is, don't think you can make money overnight in investing. It's the wrong mentality, as exciting as it may be. You have to be prepared to wait at least 5 to 10 years. Aside from that, Tesla is a winner and will continue to be. So why is Tesla crashing more than the rest of the market? Even the rest of the tech stocks are holding now. Initially, this was mainly due to the bond yield. This was because the market saw inflation on the way, and the remedy to inflation is increasing interest rates. It's the government's go-to plan strategy with monetary policy, so the market is pricing that in. If interest rates rise, then there are alternative opportunities to get a better return compared to growth stocks giving no return, except there aren't really any signs of inflation yet. Sure, the M2 money supply has literally gone through the roof, so much so that the Fed have literally stopped reporting it. But is there really any inflation? I'm referring to the Consumer Price Index, as this is what the government try and control. Sure, we've definitely seen asset inflation, but that simply is a result of the low interest rates. We haven't seen inflation from all the additional M2 money supply, or quantitative easing, or what you just call money printing. Why? Because money supply isn't the only factor for rising inflation. The money actually needs to be spent in the economy. It doesn't help much if people are just holding on to the cash and not spending it. The more it gets spent, the faster the money circulates around the economy. This is known as the velocity of money. The faster money circulates around the economy, the more it will increase inflation. But right now, in all these lockdowns, people aren't able to go out and spend, and a lot of people don't even have jobs, and therefore don't have the confidence to spend. You see, consumer confidence is another important factor in people willing to spend their money. If they are confident in the economy, then they're happy to spend more, as they feel their job is more secure, and they have a reliable source of income. In addition to that, the Federal Reserve has reassured the nation that they will not be raising interest rates, and will do everything in their power to keep the economy going, basically until there is no more value left in the dollar, which is the way it just may go. So all these factors are holding back inflation, so in my opinion, this high bond yield might be preemptive. And I'm not saying there won't be inflation eventually. In fact, I even hold Bitcoin because I think there will inevitably, but I believe the government will do what they can to control it, at least in the meantime. We also have the infamous shorts, who now have a personal vendetta against Tesla and Tesla investors after the billions they've already lost. They want their revenge, and now Tesla is being hit. They're seeing their opportunity to take them down further. They're out in full force, as we've been seeing the manipulated FUD headlines too. But eventually they will be taking their profit by buying back their positions, and the stock should hopefully recover a bit. It might readjust more to mid-700s, which is where Tesla probably feels about right for me at the moment, given the current economic environment. But please don't take my word as gospel, because at the same time, I don't have a clue what it will do. The shorters are stealing the money from the weak investors, having what is known as paper hands. If you want to invest in Tesla, you need to have diamond hands. and learn what it really means to hodl. And yes, there are some other reasons you might think it's crashing, like Baron Capital selling 1.8 million shares. But just to point out, that's only slightly over $1 billion, not really enough to have any major effect on the market. But sure, it doesn't help. Incidentally, Baron still holds 75% of their Tesla holdings. They just needed to readjust their portfolio. And Ron Baron himself has personally kept all his Tesla holdings. He has inside knowledge and is still incredibly bullish. I've held through worse than this before, and these were times when Tesla possibly could have actually gone under. These days, Tesla has come a long way and are self-funding all their growth with a nice war chest for just in case. If you're still buying, then this is a good opportunity for you. I'm still not going to tell you when to buy, as timing the market is impossible. It could drop lower than this again. I never told anyone to buy when it dipped to the 700s either. I wouldn't feel right telling people when to buy. You need to make your own judgment. If you're taking financial advice from people on YouTube, then that's not wise. I like to present how I see things and sometimes tell you what I'm doing, but there are YouTubers who were buying at $880 as well. But let's remind ourselves of some facts. In Q4 2020, free cash flow was at nearly $8 billion scaled annually, with an annual run rate of 720,000 cars a year. The new Model Y Shanghai alone will take that to 1 million this year. Then 1 million from Berlin and 2 million from Texas, all with higher profit margins. So that's 4 million car run rate at some stage next year, the equivalent of 8 times what was delivered in 2020, and with higher margins too. If we multiply free cash flow of 8 billion by 5.5, which is a 4 million run rate, divided by 720,000, then we get $44 billion, and perhaps rounded up to 50 billion for good measure due to the improvements in margin and maybe some improvement in the energy business. With a market cap of around $550 billion currently, that equates to a price to free cash flow ratio of 11. In other words, if at some time next year Tesla seized all future growth and investments in the company, and if the stock price stayed the same, they would be sitting at around a PE ratio of 11. And they still haven't even designed, let alone started manufacturing, their best-selling vehicle yet, the low-end Model 2. Of course, this does assume people are still ordering Tesla's cars, and we haven't got into a total economic meltdown, although governments will do everything they can to stop that. However, if we have, Tesla are likely to be the last man standing. For example, CCIV or Lucid Autos are down to $25 from an almost $60 high, which is a 58% drop. NIO is down from $62 to $37, a 40% drop, whereas Tesla is only down from $860 to $597 over the same time period, just a 30% drop. Because Tesla is nothing like the others. They are a well-established EV company that makes significant gross profit. They also have massive net cash reserves. Unlike all the other ICE companies, who are heavily in debt, if those of you who were concerned about the cliche of the competition are coming, then this is just another reason to be less concerned. FYI, there doesn't appear to be any competition coming anyway, but now the ICE industry are in serious trouble, and there is no way they're going to be able to get the money they wanted to attempt to compete with Tesla, which is good, because it was just going to be wasted. I'm not a fan of businesses wasting resources, particularly when some of these companies have already been bankrupt and shouldn't be around anyway. It's not fair that their bad business practices are wasting global resources still that can be appropriated better elsewhere. But not only that, if the market is concerned inflation is on the rise, and the interest rates go up, or there is a recession, then it's going to make it very hard for these ICE companies to even survive, given the level of debt they've accumulated. I think it likely some will go under, and I'm not sure if the government will be able to bail them out again. GM never even paid back all their last bailout. In fact, the only suitable bailout may be Tesla buying GM. Elon has said he would entertain the idea of buying out an ICE company. GM have a lot of factories and other resources that Tesla could use. The government may even help out just to keep more jobs going. But I'm not sure how likely the scenario might play. And there is still that little issue of the battery constraint. Autos are a cyclical business, so all manufacturers will be affected, except the EV industry is still a growing industry, so it may keep growing through a market downturn. Anyway, my point is, as easy as it may be for me to say, to be a good investor, you need to hold in there. If you can't handle it, then maybe it's not for you. It's not for everyone. You don't want to be up all night stressing what's going to happen. That's not healthy either. Otherwise, just believe in your conviction and hang in there for another 10 years. Thanks for listening. please hit the thumbs up and don't forget to subscribe.